Credit union leaders, here's what we've got for you today. First up, is digital literacy improving, or is finding tech-savvy talent still a challenge for credit unions? Our next topic, credit union liquidity. It is near historic lows. So, how can we safeguard financial stability? And our last topic, we're talking mergers. Are they the tough but necessary path to growth in 2025? Welcome to Grow Your Credit Union. I am your host, Joshua Barclay, and this is the podcast where credit union leaders gather, learn, and grow. With me, as always, is my co-hostess with the mostest, Becky Reed. Becky, what's up?
Howdy, y'all.
Becky, before we start, I want to just let you know, you might be proud of me here because I know that you do a lot of speaking engagements, but I want to let you know I had my very first keynote speech at Future Branches Austin last week.
That is awesome. How was that? So were you like on the big stage and like talking to everybody, or were you like in a breakout or?
So I thought it was going to be like a rinky-dink breakout, like one of those small, like public library type rooms.
Right.
Turns out that I was in one of the main stages with hundreds of people.
Ooh.
So I was a little nervous when I found that out, but you know what? I think I crushed it because I saw the cell phones coming out. You know when people take pictures of your slides?
Yes. Yes.
I saw a lot of people pulling out their phones, and I got some laughs early on, some self-deprecating humor. For the listeners that don't know, I produced a really bad Lifetime movie when I was in film school. So all I had to do, Becky, was just mention that I produced one of those terrible movies, and everybody laughed and I think gave me grace. I think disarmed them a little bit. But what are your tips, Becky, for keynotes moving forward?
Well, I think you have to keep the audience engaged, right? But what I do find, Joshua, is it's easier for me anyway, speaking to a larger crowd than it is a smaller crowd. And so you kind of have to temper your style based on the number of people, because if you're speaking to, a room of 200 or 300 people as opposed to 20 people, the 20-person room, you can be a little more conversational, you can be a little more casual, whereas the 200-person room, you have to have those kind of zingers that people take their phones out and take pictures of your slides for.
Well, Becky, first one down. I'm only going to need 5,000 more to catch up with you, but this is not a competition. Let's kick the show off because we have a good one. Today, we welcome, and I say this as a big welcome because him and I have been speaking behind the scenes for a little while now. So I'm excited to finally bring him onto the show. But today, we welcome the Chief Strategy and Innovation Officer at Clearview Federal Credit Union, Bill Snider. Bill, welcome to Grow Your Credit Union.
Thank you so much. It's great to be here.
When it comes to digital literacy, most Americans are barely passing the test. In a survey by Pew Research Center gauging knowledge on digital topics, the median score was a dismal 4 out of 10. That's barely a gentleman's C. And get this, only 20% of the people who participated in the survey managed to hit 7 or more correct answers. Now, I'm going to be honest with you. The survey is outdated. It's from 2019 for the record. But I'm curious if this survey still holds up. So, Bill, in your experience, is it still challenging to find talent with strong digital literacy in 2024?
Let me start by saying that I recently gave a keynote myself, and this was one of the items in my keynote. So I'm glad that we're talking about this. So while that study might be a couple years old, I still think that it's very important, and it still definitely applies. It's important to find people that have the right skills. As I tell my team, as I tell other folks, as I said in the keynote I gave, this is not the oldie days where the IT department was all that you needed, that you just needed somebody who could reset your computer. Everybody has to have those basic skills. And it's interesting. I have 2 kids in high school, and one of my kids is taking a class on how to prompt AI chatbots. So what we're seeing is actually those folks that are coming out of school they actually have those skills. And it's really more about making sure that we can upskill the current workforce and make sure that we can allow them to learn new things as we continue to grow, as those tech skills continue to evolve. And as I always say, the pandemic was 5 years ago. If you can't find that mute button to turn it off or on during a Zoom call, we probably have to work on some other skills as well.
Becky, when it comes to hiring for digital literate candidates, is this something that you are having a problem with right now, or do you feel like the general population is hip? They're up to the game of understanding how to use the technology that we're using on a daily basis.
Well, let me tell you a story about a situation we had when I was working at the credit union. Of course, now I work for a software development company, right, that requires some pretty technical skills as we're dealing with blockchain and AI and some more modern technical skills. But at the credit union, it was interesting because what I call foundational employees, so those are the employees who are working in the branch, on the front line or in the call center, and are usually the ones talking to our members every single day. Well, the tools that we use in the credit union and actually at the software company that I'm working at now is we're using a PC or a laptop, right? Generally. And on that PC or laptop, you're either using a Mac with a Mac iOS, or you're using a Windows machine with a Windows OS. And most credit unions use Microsoft products, right? They're using Windows. Well, what we found when we were hiring foundational employees, which are generally the younger end of the spectrum, not as experienced in the space, that we assumed that those folks knew how to use Microsoft Office. They did not. So that's kind of the opposite problem, right? We're talking about that survey in 2019 that probably assumed that people knew how to use Excel and could do basic Excel functions, right? Outlook, Microsoft Word, PowerPoint, things like that. Well, what we found with a 20-year-old new hire was that they did everything through a mobile app. They did not use an operating system on a laptop or a PC. And that's kind of an interesting thing too. So when you're talking about tech skills, you kind of have to look at both ends of the spectrum.
Yeah, it's a very interesting topic. I had a similar experience, same sort of thing. I assumed, because I have been using Outlook for a long time, that everybody could use Outlook. And I remember bringing somebody onto the team and said, just go ahead, schedule a meeting, look at their calendar, send out the invite. And the reaction I got was a little bit of a scared reaction because they hadn't done it. And that led to an interesting conversation about this is how we use Outlook, because I did make the assumption, who doesn't use Outlook? To your point, who can't create a PowerPoint slide? And you're right. Everybody's on an iPad now. Everybody uses a phone, and it might be a different skill set.
Bill, when you're hiring, do you have some prerequisite digital skills that are necessary? And let's say you bring somebody in and they have a great personality, great mindset. Do you have some path for training?
Yes. It's important that they have some of those basic skills. And I love to bring somebody on who's very passionate, who can really mesh with my team, mesh with their peers. But at the end of the day, they do have to do some work. And so they have to be able to do some basic things, be able to create a slide, to be able to send an email, be able to create a spreadsheet. And now that's being added to, can you create an AI prompt? Can you take a multiple page article and have AI critique it and build a couple sentences? And so we at Clearview make sure that those folks have the right skills, the right education. We offer them some ways to get that. And if not, I help them, or other folks here help them learn what they need to do, because some of those skills, just aren't taught. It is assumed. And if they don't have it, we have to make sure that we get them the right skills.
Becky, you're at a very, very forward-thinking tech company. And the thing that kept running through my mind as we're talking is, I just heard at the conference, and the numbers, don't quote me on the numbers, but like Bank of America has like 6,000 AI scientists right now, right? How do credit unions compete with these behemoths when that tech literacy gap is so stark and we can't pay people the kind of money that Bank of America can pay them? So what are your thoughts, Becky?
Well, I think that it's time for credit unions to double down on our cooperative nature and leverage CUSOs and our neighbors and our friends and our vendor partners to assist us, because there's two things that we get to decide at a credit union when we want to do something. We either build it or we buy it. And credit unions are not great historically at building software. We're just not. And I can tell you, as a credit union person who works for a software company now, I don't have the first clue about how to build a piece of software. I am reliant upon our founder, right, John, who is a software developer who understands that process intimately. So while I can understand holistically about how that might work, I probably would not do very well at my credit union if I just hired a software developer and said, go build this. It would not end well. And I know that from experience now working for a software company. So Chase has a $18 billion tech budget, right? They have 600 people that are working in technology, and they are developing software and they are building software because, in a sense, they are a software development company, right? They're building fintech software for their particular bank. Credit unions, most of them do not have that kind of budget, don't have that kind of skill set, nor can afford to be able to build it. So what that means is they're going to have to go buy it. There are some really great partners in the credit union space, and CUSOs are a fantastic example. They have to be owned by credit unions to be called a CUSO. And they usually work exclusively with credit unions. Sometimes they include some community banks in their partnership, their client list. But they understand the credit union space like me. Maybe they have credit union people even working there. And so it is a great opportunity for credit unions to leverage a fintech that's owned by other credit unions to build what they need. Now, what I can tell you is credit unions are terrible about piloting things and doing proof of concept. And to really develop a great software product, you need to be able to do both of those. Credit unions tend to just want to buy something that's prepackaged, and that might not be the best thing. But my answer to that is buy it and partner with somebody who understands your business.
Credit union liquidity is near a historic low, a situation that raises questions about financial resilience and the ability to meet member needs in uncertain times. Bill, with these liquidity problems that I'm reading about, and I did see some data on it, which I won't cite because there's too much to cite, what strategies are you employing right now to boost liquidity without sacrificing financial stability or member trust?
Yeah, I'm not the CFO here, but not a day goes by that I am not involved in a conversation about making sure that we are liquid with our assets. It's a challenge, but definitely an opportunity. So we're doing a couple things. One of the things we're looking at, like many others in the space, are just the duration of our assets, investments, making sure that we have a combination of both long-term and short-term. Whereas before the rising interest rate environment, I think a lot of folks were locked into longer-term investments, and that's definitely been a change. We're also looking at our deposit products more than we ever have before. We had a large focus on loans, still a focus, but now we're more at balance. And we're looking at deposits so heavily that we actually created a whole new department just focused on deposit products to look at what we have today, what we need in the future, things that might be different that either, at least for us, are different, maybe different in our area. But that's definitely something that we're trying to look at to make sure that we have the right deposit products for folks that bank with us today and the folks that might bank with us in the future. And then our finance team does a great job of running various analysis and scenarios about what happens if rates go up, what if they go down, over and over again, looking at all those different possibilities to make sure that we can support the folks that want to bank with us. So we do that all the time. And then we share that as the executive team to make sure that we have the information and each group can then respond accordingly.
I like what you said that you created a new department. I was not expecting that. I love when I get a proactive answer versus sometimes you get the answer of, well, we don't think the liquidity thing is that big of a deal. And Becky, obviously, give me your take on what Bill said. But in addition to that, I want to know, I haven't been in the space nearly as long as either of you have. I am talking to a lot of folks that are telling me behind the scenes that they are a little worried about liquidity. That's been happening for the last, 2 years. Is the situation we're in now different? Should we be worried? Should the alarm bells be going off that this liquidity problem is different than in the past? And what I mean by that is, let's just talk about the obvious. We just got out of a Black Plague moment. We have the printing press moment with AI, geopolitical tensions, inflation is running hot. The payment on a new Toyota Camry is like $1,000, right? When I was in middle school, I could get a Lamborghini Diablo for $1,000 a month. So with all of those storm clouds headed our way, is this liquidity problem different? Or is this just kind of one of those things, you've seen it, you've been there, we'll get through it, no big deal?
Well, what's interesting about what Bill said is he mentioned a department that is specifically looking at deposits. And I have been in this industry long enough to remember when those kinds of departments were a thing, deposit operations. And they kind of went by the wayside when we had 2 decades worth of zero interest rates, and deposits were actually an issue. It was difficult to get rid of deposits, actually. We were growing, too fast and couldn't lend it out quick enough. And, it's always a balance. But what I'm going to quote is from scripture, actually, from Song of Solomon specifically, and it is, there is nothing new under the sun. And he repeats that over and over in that particular book, but there really isn't. So it's same stuff, different day, right? Things might be a little bit different. I think what's interesting now is there is some emerging technology that I think credit unions need to be looking at to assist with deposit and loan balance. And that's what Bill was talking about earlier, right? That balance, that's asset liability management 101, right? We have our balance and our concentration risk and all of those things that we have to talk about. But tokenizing deposits and tokenizing loan portfolios is a way that we can use distributed ledger technology and tokenization to distribute those assets or liabilities, as it were, across the industry as a whole, that is easier than it has ever been in the past. AI also can be used to leverage predictive analytics, looking at your data and analyzing when during the month your deposits are the lowest and when you might be able to leverage other types of things, maybe non-member deposits or something else, in order to get through that low liquidity situation. So there's lots of really great things that are available now that weren't available 5 years ago that I think credit unions should be looking at.
And Bill, just to throw it back at you, do you agree with Becky? This is just same-ish, different day, as we should say?
Yeah, I had an internship once many, many years ago where I had to interview the folks that I worked with, and the one, it still stands out. He said, everything goes in cycles. And while it might seem new today, and he was talking to me at the time as an intern, so I had no experience in that field, everything does go in cycles. And while it might feel a little bit different, and I, for one, have not been in this environment before, other folks here have not, but this sort of environment has happened before, maybe not as dramatically as we saw it, and it'll probably happen again. So I do think that it's an opportunity to learn from what's happened before, but also to make sure that we set a path forward so the next time this happens, that we're ready. And that was some of the thought process by looking at our deposits products and making sure that we're set up for the future. So if and when this happens again, we're not caught by surprise and have to totally reshuffle everything that we do.
I appreciate you saying that, because now is not a time for complacency. And I feel like the industry, Becky, with those low rates was probably pretty complacent for a while. And now you can't be complacent. So in a way, it's kind of like bracing you for the future. It's the universe's way of saying, hey, you got to do something right now or you're not going to be around. So I think this may be a benefit for the industry as a whole.
I think it is. Look, necessity is the mother of invention, right? Well, even if you're not inventing something, you have a need and you need to solve it. And so you're looking out there for ways to solve it, and creating a department to pay attention to it and focus on it is one way to solve it. Utilizing emerging technology is another way to solve it. Partnering with other credit unions or vendors to try to solve it. So there's lots of different ways to look at it. But yes, I mean, sometimes we all kind of need a punch in the arm, right?
For many credit union leaders, the road to a better member experience often leads to mergers and acquisitions. In fact, of the 46 mergers in Q2, 32 of them cited expanded services as their motivation. But achieving the dream comes with its own set of challenges, especially when it comes to navigating a successful merger. Bill, you've led Clearview Federal Credit Union through several mergers, so you know the hard work and foresight it takes. For credit union leaders considering a merger, what would you say are the biggest challenges to consider when preparing for that process?
Yeah, so here's what you don't want. You don't want that final scene from the graduate where they get on the bus at the end of the graduate after they interrupt the wedding, and they sort of look at each other and say, what's next? You don't want that. And so you have to make sure that you plan well ahead, because sure, it sounds awesome. We're going to merge together. We're going to combine our locations. We're going to combine our people, combine our balance sheets and income statements. But there's a lot more to it than that. What do you do with those people that work in the back office? What do you do with those people that work in the branches? What about the culture? How is that going to survive? Even down to the very tactical, hey, now we have 2 core systems and 2 credit card processors, and how are we going to determine how we sunset one and keep the other? And those are all considerations that have to be made, ideally, before the merger paperwork is signed, before there's a vote, because if you get to that point and having considered it, it's going to be a challenge. And I do think that mergers will continue to happen, and I think they'll be larger. And I think those conversations have to take place even earlier in the process to ensure that everything is smooth, because you don't want to get to the end of the merger and go, oh, now we have all these new members or employees or branches, and not have a plan to how to handle them.
When we get into specifics, Bill, what are some of the specific things that you did not foresee where you were like, wow, this is hitting me over the head right now, and I did not see this one coming?
Yeah, definitely some of the staffing, although we thought we had a great plan when we brought in some previous folks. But there's some overlap. And sometimes the people that we had slotted in a position might not have been a great fit. And sometimes we thought that, and sometimes they thought that. And so we've changed our process to make sure that we talk to those folks that we're going to bring over even earlier in the process. When we acquired new branches, the folks that bank at those locations tend to be a little bit different than the folks that bank at our current ones. So we needed to change the staffing model a little bit. We have folks that are used to, because we have a call center calling in our most recent merger we did, they were used to stopping in. And so all of a sudden we had a lot of more branch traffic in a couple locations than we thought, because we just didn't talk about it. We thought that those folks would just take the same process as the current folks who bank with us. And then there's even minor things like, hey, we had a wall calendar and we have a calendar book. How do we make sure that everybody gets those sort of things? And who has the right pens? And where's the notebooks go? So it really is all of those things and making sure that you have those conversations and discuss them. And it's a continual process. Every time that we do a merger, we learn something new, put a new process in place to make sure that the next one is even better.
Becky, give me your take on this whole thing. Mergers, what do you got for me?
Well, I'm going to say that I no longer necessarily subscribe to the argument of economies of scale. I think that bigger is not always better. And I have to tell you that is a little bit of a mind change for me, because there was a point in time when I really was advocating to my board that we have to get bigger. And the only way that we're going to be able to do that is through a merger. Now, having gone through looking at several merger opportunities, both as the acquirer and the acquiree, the cost benefit analysis, you really have to take a look at that, because what Bill is talking about is the cost of combining all these systems. I mean, people at the end of the day is what we're all about, right? It's our employees who are serving our members, but the cost of that merger is the members' money. So in many cases, I mean, I've talked to people and it's millions of dollars to do a core change because, you know, you're dealing with somebody who maybe their contract isn't up for 3 or 4 years. You're having to look at combining systems, and we're talking about technology, right? And even just infrastructure combinations is really super hard. You know, at Lone Star, we were 100% virtual. Other credit unions we were looking at merging with were very traditional and had physical servers that hadn't been depreciated yet, that were still on the books. And so if we put those out of commission, you have to take that expense to the bottom line immediately. And so there are some considerations that you have to take. And I think that in some cases, the effort to just be bigger was the overruling and overarching idea, and maybe the cost to doing it was kind of put by the wayside. And so, yes, if it is the cost benefit, because at the end of the day, is it better for the members with us together? And is it worth the cost to the members in order to make that happen? And I don't think many credit unions look at it from that perspective.
Bill, talk to me about how you looked at it from that perspective.
Sure. We talk a lot about the right merger at the right time. So there have been mergers that we've turned down because they just don't fit who we are. Either they have a location that doesn't fit nicely with the rest of our network, or to Becky's point, the cost just outweighs the benefits of doing a merger, because it doesn't matter how big the credit union is. There are certain things in the merger that you have to do regardless of size. And the same amount of people we have learned are going to be involved in that merger. And so we need to make sure that it's the right merger for us. And so that is something that we look at, especially recently. We've acquired some branches that was new to us. And that whole entire process to go through and look at those locations to make sure that they didn't need so much work that we couldn't afford it. So that also lays in an added piece to any merger, is what, besides the things like a server and the software systems, if you're acquiring a building, what does that look like? And we had an issue. We acquired a branch. I think we flipped the switch, so to speak, on a Monday or Tuesday, and Wednesday or Thursday, somebody ran into the sign and it fell over. So that was just an added expense that we didn't really consider, but now that's one of our locations and we have to fix it. So it's always things like that you have to look at. And again, make sure 100% that the benefits are going to outweigh the costs.
Don't jump into bed with a merger before you think about it, folks. That is what I am getting from Bill and Becky on this one. That brings us to the end of the show. Bill, do you have any final thoughts for our listeners pertaining to anything we talked about today, or maybe just something you want to riff on?
Yeah, well, first I want to thank you both for having me. It was a great experience. But I would say that based on everything that we've talked about today, I think they all tie together. And I think as I look at it, the underlying theme is sort of the ability to learn and to grow. We talked about skills in the beginning, making sure you have the right assets, asset mix, mergers. There's a ton of great materials out there, and I would just encourage everybody to go and to read and to listen to podcasts like this. But it's a great opportunity to learn and to grow, and I think that's an important thing. Just name of the podcast. Keep growing yourself and keep growing the organization that you're with.
And Bill, if anybody wants to get a hold of you, let's say someone's listening and they're like, I like what that guy's putting down. How can listeners get in touch with you? What's the best way to go about that?
LinkedIn is probably the best. Bill Snider. You'll see my smiling face. Send me a message. I'll be happy to get back to you. It might take me a day or two, not on purpose, but I'll be happy to get back to you, and then we can chat that way, then go from there.
Sweet. Thank you, Bill. Becky, final thoughts.
Well, we talked about there is nothing new under the sun. We also talked about things are cyclical. But even though that is true, things do change. The circumstances are slightly different and we have to adapt. So if I could sum up our episode, it is certainly learn from experience, but also embrace the new paradigm.
And Becky, you know, I know the answer to this, but I have to ask, if somebody wants to get a hold of you, what's the best way?
Becky Reed on LinkedIn.
That's right. LinkedIn, Becky Reed. I'm just going to start answering that one for you from now on. But, I figured I'd be polite and ask you. I want to thank Bill for dropping by on the show today. Becky, my co-host, I want to thank you as always. And I want to give a special thanks to our listeners for continuing to support and listen to another episode of Grow Your Credit Union. If you like the show, please follow us on your podcast player of choice. If you want to be a guest or would like to talk about sponsorship opportunities, head to growyourcreditunion.com to learn more. Thank you for listening, and we will see you next time. Take care, and bye-bye.